What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
All right, welcome back to The Last Trade. This week we have James von Straten joining us from CoinDesk, and I'm joined by my co-hosts Michael Tanguma and Brian Cubellis. Great to see you, gentlemen. James, thanks for joining us this lovely evening of all-time highs. We were joking before we hit record that when we recorded The Last Trade last week, we were breaking through 93,000, but really didn't have the momentum to continue on. So we're kind of edging up against 94K right now. James, it probably has something to do with you joining us today and a lot of the bullish takes you'll be bringing to the table. But James, great to see you. How are you doing?
Thank you for having me, guys. Yeah, really excited just to dive into the world of Bitcoin and all the derivatives that surround it. But yeah, I'm doing really well. It's an extremely exciting time to be in this space, and it's something that I think all of us have been gearing up for a number of years now. And I think the most surprising thing is really that I haven't got any text from so-called normie friends, or it is relatively quiet. And this is another reason why I think the interest is reasonably low, which is why we can go higher. One of the many reasons.
You know, I did get one text on Friday afternoon last week from this individual I met at my buddy's wedding in June, and he was like, "Hey, can we talk about that crypto thing?" So I got one on the scoreboard so far, but you're right, James.
I've gotten a couple, but it's nothing like you would expect. Like, there are people who should certainly be reaching out to me that haven't yet. So
what I found was the catalyst, because obviously with COVID, everyone was sitting at home, nothing to do, buying. But even if I'm getting that slightly bit of retail interest, they're not doing that conversion. They're not actually buying Bitcoin or buying crypto, essentially. They're just like, oh, it's hit all-time highs, or oh, it's whatever. But they're not actually then going and buying it, which was different to COVID, because I think everyone's now back into that 9 to 5 mindset and completely leaving us in this other realm.
The ears are perking up, but there isn't that actual smash buy, or like the version of I think where everyone goes down the rabbit hole is they start to wonder like, wait, what's actually happening here? Because that's when everybody starts picking up. It's like rather than just a little buy, it's like, let me reevaluate what the hell's happening, and then that's when you get that like FOMO start chasing and the momentum, and then it starts that reflexive feedback loop that we're way early on.
Well, I think it's also hard for us to grasp because we're so deep in the space, and to an extent in an echo chamber or a bubble. But for the average normie person, like, they, up until this point where we're making new all-time highs, they like legitimately thought it was dead again, right? Like, so it's, and then the other component of that too is like, even though it's making all-time highs, then there's that natural psychological aversion of like, oh, do I want to be buying now at all-time highs? And then that's really what you hope just sparks the curiosity to dig a little bit deeper and understand where this actually all potentially goes. And if it keeps not dying and making new all-time highs, maybe there's something that you've missed previously.
Yeah, for me, it's once we hit another big round number. Humans love round numbers.
Yep.
So at 10K, I thought, okay, Bitcoin's this mainstream asset, cements itself. I was wrong. It will be 100K. But the alarm bells for retail will be Bitcoin at 100K, and it's not going to be gold at $3,000, $4,000, $5,000 an ounce. And I think that's the difference, because if you ask retail what the price of gold is, they couldn't tell you. But Bitcoin will be on every single mainstream media headline at 100,000.
Yeah, that's exactly right. I've long thought I like the framing of the IPO moment. People reference it as the ETF. I think it's the 100K. I think the 100K is that you kind of invert. Well, why can't this go to zero? It's like, now where can this actually go to? Can it go to 1 million? Where is that? Not to throw more bullishness on kind of what's probably already going to be a very bullish pod, but I I had some interesting, Bitcoin conversations over the weekend shopping with very like high net worth individuals that I think it's going to be the easiest to the point that we discussed here that it's ever been because of what happened in the past couple of years. And so there's at least that embedded frame of reference that people know there's an asset class that's here, but maybe it's all like snake oil, whatever. But then the here seeing previous all-time highs get breached and then into the 100K. And then, because the two big lever points was one is like, did you know it's 91K? And then that everyone's ears perk up. They're like, wait, with $91,000. But then the second part is just figuring out the way that you reference it's just a proxy for the amount of money printing. Because like they already know that the money printing's there. Like 4 years ago, it was still kind of taboo. Everyone knows that like all this is unsustainable. It costs too much for food. And when you tell them that this is the solution and you break it down in a very concise way, they're like, oh shit. And then what I found is very helpful is giving them the reason why nobody tells them this story because they're telling them, they're the Ponzi to buy all these other things or like go park it in the wrong way. It's like, no, like you have to be very serious about this and thinking about your counterparty and also what you buy. And you don't need all this trash. And it's kind of like where our offering comes in. But I think like the market's super primed for this whole thing. So yeah, it's gonna be fun.
I'm gonna take the other side of the coin, and
There we go.
this reminds me actually over the weekend, my buddy had a few of us together for his birthday, and he was like, I bought $20 of Doge, and I was just like, what the hell, man? I had no words for him. I was just so disappointed because
Bias.
he knows. I know it's there's
I think Jackson's just doxing who his friend group is. I don't think this is a proxy for like. I don't think this is a proxy for like the sophisticated sentiment of investors. I think he's just he's
I don't know, Michael. I actually do think that we're still in this weird period where Bitcoin has certainly awoken a lot of very credible allocators in the space, and a lot of that has to do with the ETFs. But I would say that majority of people still couldn't fully. Majority of people that you just would pick off the street, I think, would have a hard time discerning the difference between Bitcoin and Dogecoin. But maybe for the people that we're speaking to, and James, the people that you're in circles with in the industry, people are really starting to coalesce around the idea that Bitcoin is very different than the broader crypto space. But for most people, they're still conflating the two.
You're right. You just jogged my memory. There was a lot of conversation during the when I was referencing around CBDCs and other cryptocurrencies and had it like, but I think those are getting easier to dismiss. But yeah, you're all right.
There's also
the conflation there.
I think that's right, Jackson. But I think at the risk of saying this time is different, I'll say it. Like no one's talking about a Doge strategic reserve, right? Like the geopolitical sovereign level game theory is playing out for a specific asset, and it's Bitcoin. So I think subconsciously or consciously, I think that's some air cover or signal in the market that Bitcoin is different.
I was just going to say a joke that we dodge government department now.
Right, yes.
Yeah. I mean, it's not helping our case here, gentlemen. But James, we kind of jumped right into it, which is a ton of fun, and it's kind of a hot start, which I appreciate. But I don't want to do a disservice to you as well. Just would love to give the audience a better feel for your background. Mentioned at the top of the show, you're a senior analyst at CoinDesk. You're focusing predominantly on macro and Bitcoin, but really, how did you get into the seat that you're currently in? What were your experiences that kind of primed for you to be adopting Bitcoin at a personal level and then, taking the plunge professionally as well and covering the asset class?
Yeah, I've always had an interest in money, finance, economics, probably through my parents. And I first bought Bitcoin, only really heard of Bitcoin in 2017. So I bought in December, right at the very top. I think the price was about 19,900 and something. And I was like, yeah, it seems like a good buy. So I bought the exact top that you could buy. A couple of months later, bear market. But in those couple of years, being really early 20s, didn't really have anything else going on as much. It was just studying, learning. I didn't really take a liking to any of the crypto. I did love the 24/7, the volatility, like from that aspect, but I kind of understood the I understood the gold narrative pretty well. I actually bought gold before I bought Bitcoin, which is quite weird at like the age of 20. And then I realized like shit, like I can't really buy a house over the next couple of years unless I put down like £500,000 worth of debt in London. So I thought, okay, this is probably the best way to do it. Probably fully understanding Bitcoin at that time. And then not until 2022, I was in normie jobs doing a 9 to 5. And then I thought, okay, I've been learning about Bitcoin for 4 or 5 years. I want to take a full plunge at this. I went to Saylor and Co, which is a hedge fund, in their research department. So they were just onboarding Bitcoin as a treasury asset for themselves and wanted to understand on-chain analysis. And that was kind of the stuff I was just doing on Twitter by myself and just putting charts up where we are in the cycle, all of that kind of stuff. And started with them. I then was there for about a year and a half or so and went to another media publication, Crypto Slate, focusing again on Bitcoin and macro. And then, yeah, just joined CoinDesk a couple of months ago, doing similar stuff and just really understanding the intricacies between Bitcoin and the macro landscape, really.
Are you ready to secure your future with Bitcoin? At Onramp, we're revolutionizing how you can save for retirement. Onramp has just launched the industry's first Bitcoin IRA product with multi-institution custody, designed to give you unparalleled security, transparency, and peace of mind. With Onramp, you can verify your assets on-chain and protect them with the support of 3 independent institutions, reducing risks and enhancing security. At Onramp, we believe that Bitcoin is the most important asset of the 21st century. The hard part is securing it right. There are shortcomings with keeping your coins on an exchange, but also with setting up your own self-custody arrangement. Onramp solves for these concerns. Our multi-institution custody solution maximizes security and minimizes counterparty risk, ensuring that your Bitcoin remains securely in your possession and provides built-in inheritance planning to ensure your family is protected as well. Onramp provides peace of mind for your Bitcoin journey, whether for your whole stack or for part of it as a complement to your existing self-custody setup. For more information about our services, as well as our new Bitcoin IRA product, check us out at onrampbitcoin.com.
Yeah, no, that's awesome, and really excited to dig into some of the topics that you've been covering recently. Fascinating to hear that you were at a hedge fund a couple of years back that was already thinking about Bitcoin as a treasury reserve asset. How did that kind of coalesce within that organization? Was it kind of driven top down by leadership, or was that?
Yeah, the CEO at the time, he was a big Bitcoiner. They acquired a custody service called Numbers. So they were well ahead of the game. I think they were there since 2013, but they wanted to really like branch out their research department. So that's kind of where I learned about Glassnode and all of that kind of other data stuff. And why it was so interesting is like when you trade any of these US equities, you just don't get the granularity of the data that the on-chain analysis provides you. You can go so granular with this data, and I'm not saying it gives you an edge in the market or anything, but from a data perspective, it is fascinating because it's just a story. And there are so many charts and cycles and metrics that, not saying that they time bottoms or tops perfectly, but they give you such a good understanding of Bitcoin as an asset and the story of its 15 years of adoption and what monetization from zero would really look like. And it's such a beautiful way of portraying the data. But like one metric for me that just really resonates with this cycle, comparing it to previous cycles, I'm sure you've seen when you look at the Bitcoin price from the cycle low, which was the FTX collapse November 2022, and we're up about 500% from the cycle low. But if you take those 2 previous cycles before, at that point in the cycle, we're exactly where we were. And that to me is just human psychology. You buy Bitcoin when it's depressed, really low, because you're like, it's so cheap, I just have to buy it. And then it obviously does that whole rebounding phase and the consolidation phase and then that disbelief phase. And it's picture perfect, which is one of the reasons why I still ascribe to that 4-year cycle theory.
Yeah, absolutely. I mean, there's a lot of, I guess, debate at this point just how much the halving plays into the Bitcoin cycle dynamics. I would tend to agree with you that it still plays a pretty crucial role, and it has to be in part due to investor behavior and human psychology, James. But to your point, is like this chart is an interesting one to look at because you can kind of see that we're tracking fairly closely the third and fourth epoch. So the price performance since halving, right? Like for those who aren't taking a look at the video for this podcast, we're looking at a chart that shows the first, second, third, fourth, fifth epoch and the price performance after the halving. So we're how many days into this one? 238 days, and the performance is pretty close to, obviously, the first two cycles were disproportionately large, just for obviously many reasons, but we're tracking pretty closely to the previous two cycles. James, do you have any thoughts on that?
Yeah, I think this kind of goes back to the human psychology. I do think the halving decreases in its relevance cycle after cycle. But again, I think as long as the theory or the narrative continues to stay up, then it's relevant. Until we break the 4-year cycle, it's not relevant. Yeah, we have these new players in the game, the ETFs, MicroStrategy, all the other Bitcoin crypto equities that are doing this playbook. We've never had this demand sell side imbalance before, ever. So that would be one reason why, yeah, we should just break to the upside. You have the other theories of, no, we have the diminishing returns theory where each cycle returns get less and less. But again, we're valuing that denominated in a fiat currency that has to inflate in a credit in the credit. So you can go back and forth with it, but as long as human psychology plays out, I think we're still ascribing to this theory.
I'm curious, do you agree with the notion that the previous cycle was somewhat muted due to what FTX was doing and various forms of paper Bitcoin? Because I think it was interesting at the beginning of this year when, the ETFs were going live and there was, this thought of, oh, we made all-time highs before the halving for the first time. And in the back of my mind, I was like, well, yeah, but what if the previous cycle had just played out like it should have? Would we really be above all-time highs before the halving? Probably not. Curious if you ascribe to that line of thinking.
So two things. I do ascribe to FTX muting that cycle on the basis that I actually count the all-time high in April as the real all-time high and not the November all-time high. From an on-chain perspective, addresses, transaction, throughput, everything was, that's a formal all-time high. And then we had the China mining ban, which saw that hash rate 50% correction. That really stunted any kind of meaningful growth. And then that second half of 2021 was purely a derivatives play. It was just pure leverage. I think it was more I think everyone knew inflation was here to stay. The Fed are tightening, central banks are tightening. Let's just get like one more juice out of this cycle. So that 2021 second part completely took me off guard. I wasn't expecting that. So I played it as April was the high, and the next 6 months kind of threw me because I was so bearish, kind of because of the China mining ban. And then going into the all-time high before the halving, that was one of the calls that I did make because one, I was so bullish on the ETFs and the impact they would have. But what was really interesting was in October of 2023, from just before October 2023, Binance was the number one futures exchange, which is completely retail driven. CME, the institutional exchange, was second. From October, it became number one. And that's when Bitcoin started to climb. And I was like, okay, these guys are front running this ETF launch. The exact same thing happened in the gold ETF in 2004. Just before the ETF launch in gold hit a 16-year high because all the hedge funds, traders were taking a long position on the futures market, front running the ETF. The narrative of the gold and Bitcoin ETFs are so similar. It's scary. And for the 7 years from 2004 to 2011, when gold peaked, the ETF inflows were just inflows every single year. And I think Bitwise did this unbelievable chart where the Bitcoin inflows just destroy the gold inflows. And yeah, for the next 7 years or however long, we are going to get inflows, and they are only going to accelerate, in my opinion. So yeah, it's so hard to contain yourself, and you always have to justify why you're being so bullish. But yeah, these ETFs have just been just a tremendous success. The last thing that I just want to talk about the ETFs, just because it's on my mind, is the basis trade, which was where you're long the underlying asset and then you're shorting the futures market and you're capturing that premium. That was prevalent at the beginning of the launch. That dominated most of the ETF inflows. That's why we were kind of consolidating. For other reasons, we were obviously drawing down and consolidating after the all-time high. But now these ETF inflows are not basis driven. They are long plays, and I think it's taken almost a year for the hedge funds and these traders to be like, okay, we've developed a big enough liquidity in the market. I'm now comfortable taking a net long position in these ETFs. And I think with these launch of options on IBIT today, and that's going to grow the spot market, that will grow the options market, that's just going to grow everything. And it means bigger positions for these bigger players.
Yeah, that's something we talked about all summer long because we weren't seeing that retail interest or demand, and that had come up with some folks closer to Wall Street as the basis trade for a lot of these, like absorbing these inflows. But it also makes sense post that consolidation. What we're seeing now is actual positions being established.
Yeah, and this is something like Bernstein, the private asset manager, was saying that it takes time for these guys to get a liking and accustomed to this kind of market. And yeah, I think we're here. I think these next 12 to 18 months is the part of the cycle that is the hardest part, just to essentially sit on your hands. But yeah, we're now seeing almost the full monetization of Bitcoin within all these financial instruments now.
Yeah, curious on your side, being so close to the analysis on the listed companies, but then also on the institutional side, where do you see the inflows or majority over the next 12 to 18 months? Because we have a lot of conversations, and just from anecdotally, the institutions still seem they're very far. Obviously, like there's on the margins interest, but they're still like trying to develop a thesis and then the air cover to establish how do they not get, because the 2021 is still top of mind with everyone and like how everything went down. Where on the treasury, it feels like we're seeing, on a daily basis, new firms stepping into the market, specifically listed companies. Curious how you think about that.
Yeah, I think if you look at the 13F filings and the top holders of IBIT, they're pretty much all hedge funds and investment companies that are probably doing this basis trade kind of play. And we're not seeing that many net long positions. You've got the Wisconsin Pension Fund, I think maybe one or two other pension funds, but not many are doing that kind of play. So I think it is dominated by retail. You can see by the size of trade, it's relatively small, okay, comparing to the other ETFs. And then it's really interesting. Their cost basis is around, I think, around 60,000 off the top of my head, the ETF investors. And each time we had a 20-30% correction, their cost basis was almost the support for the price. So these guys are really momentum driven. So I'd like to say that is primarily retail, but it is encouraging. Like when we had that yen carry trade unwind in August, I think it was August, the IBIT saw like no outflows. Like for 2 days, there was no outflows. And these guys have stomached 20-30% corrections over the year. And I think that just builds that conviction. And maybe these institutional guys take longer. We know that quarters, years, but I think this next quarter coming of the 13F filings, because the one we just saw was the one that wouldn't have the Trump victory and all of the recent price action. I think now we're going to see people and companies scrambling to actually kind of get a position now, because I think the market is now dictating them. They can't really dictate the market.
Yeah, those are great points. We were actually taking a look at the ETF data or the 13F data yesterday and kind of digging through the largest position sizes. James, to your point, a lot of hedge funds that are probably, some are long, others are probably have short futures on to hedge out some of the exposure. But taking a look specifically at 13F filings that came in for firms that have greater than a 5% allocation to Bitcoin or to the ETF specifically was like about 2% or so. And those are ballpark numbers. So only 2% of, let's say, the firms that were captured in the third quarter filings for the Bitcoin ETFs had greater than a 5% allocation. So it's still, in most cases, very de minimis. Like you see 10 BIP exposure here, 30 bips here, a percent here. James, I'll be really curious as well to see what the fourth quarter results look like, because I agree with you that markets really like certainty, and I think now have a lot more certainty as it relates to how the political landscape will shape up to be in favor and supportive of Bitcoin and the broader crypto space versus being antagonistic. So I do think now that was probably the biggest impediment to not seeing more institutional adoption, and now that barrier has been lifted. So it'll be quite exciting to see what happens for the fourth quarter filings, because I think it will look vastly different.
Yeah, I think we're going to get some form of announcement from someone within the next 6 months or Trump's first 100 days, if there is the rumors of the strategic Bitcoin reserve. There, I've been looking at these. I've just been looking at the Bitcoin price, and every time it goes down, I'm like, there's just bids relentlessly every time it drops. And if you look at the bull market correction drawdowns for this cycle, our biggest drawdown this cycle has been 25%, maybe 30% at a push. If you compare it to other cycles, okay, Bitcoin is becoming more mature as an asset class, but we were seeing 50, 60, 70% drawdowns in bull markets. So it's normal. And to only get maybe a 30% correction like once, it's just insane. Like, we're so used to this volatility and we just haven't really got it this cycle. Yeah, you can talk about the 1 or 2 days where Germany sold or the yen carry trade unwind, but those are like one-off events and it kind of rebounds straight after. Again, showing that demand for these bids. And we've now been around 90,000 for a week, and the market hasn't given up anything really below that, and anything below 90,000. Like, as a joke, a couple of days ago, I tweeted that the Bitcoin price went down minus 0.77%. So I'm going to buy, and it was like 88,000. And that was literally like the bottom. And now we're at 93 and a half. And to me, that is so indicative of like, this is relentless bidding. And this is why we're marching on higher.
Yeah, the momentum seems to the structure really change post-election. And to your point, being around, never seen bid like this, where like the corrections are usually there, and it's wild to see it run like this and then barely correct, and then start marching again. So yeah.
Why this is different, sorry, is in this regard, this is something that US equities and gold do. So gold has made like an all-time high this year, and like 30 times, 35 times. Like, but every time that Bitcoin makes an all-time high, every time people are like, greed, euphoria, must sell, it's going to go down again. It did in March, but again, this is why this part is different, because we didn't get that correction and all the holders were in profit. Yeah, we saw a lot of profit. Well, actually, there was a stat. When we broke the all-time high for the first time, I think around, say, 85,000, 86,000 2 weeks ago, there was more realized profit in the 2017 all-time high than we saw when Bitcoin broke the $86,000 all-time high. And Bitcoin is 4 times greater in nominal value than the 2017 all-time high. And that to me is wild, that there was more profit taking 7 years ago, because that was a bubble and everyone was like, yeah, take profits. But people were like, no, I'm not taking the profits here. Even on an inflation adjusted basis, we're just above. But people were like, no, this thing is going higher.
Yeah, there's a this notion of like this idea of like energy can neither be created nor destroyed. Like the volatility has to exist somewhere always. And so going back to 21 or 22, there's a lot of demand that exists that people don't have exposure or didn't have exposure, right? From like the paper Bitcoin, and whether it was the payouts from Genesis and the other firms, like there's a lot of people short Bitcoin that want Bitcoin independent of like net new market, right? Usually it's like goes back to the FOMO and the like there's a lot of people going to be chasing. I think even right now and going into it, that I don't think we've historically seen willing to step in and then not sell because they have long-term conviction versus just looking for, some kind of short-term price appreciation.
Yeah, it's a very weird dynamic. Like you said earlier in the call, I think the COVID mentality is kind of changed. I was at a conference last week in Slovenia, at a mining conference, and not only obviously everyone was bullish about Bitcoin, but they were also talking about the fiat currency being like, I don't want it. I don't want to hold it. I just don't want it. And it's not even that they wanted Bitcoin. They were there to learn about Bitcoin. They were just like, I don't want this. And like that's the first time for me, really, that a lot of people were like, don't want it. Like they're just outright like just rejecting it. And it again, that's part of the mentality, probably the game theory of what is your denominator in this world. And it was again interesting to see that the All In podcast with the four of them talking about what do you see Bitcoin as a denominator for the world against goods and services? And again, that's a mindset to have as well. So I think this all takes time, but it's mad how this is all happening. And it's happening quickly, and COVID did accelerate this by a number of years.
It's funny you mentioned all in because we've talked about this before, and like, it's advantageous or easy for them to not talk about it or think it's a joke when the price is low because that's just who, and then also the debt cycles, and they have investors, and they have to just kind of appeal to them. But I've always had this contention that like Chamath is probably the smartest one on that call, and he groks what's happening, but it's just not in his best interest to explain it to like large investors that the dollar is going to end and all the things associated. But on this last call, he kind of hinted at it in like understanding the dynamic of like, it's like, hey guys, like right now the dollar's not ending. Like, so let's just not talk about it. It's not being used. That's okay. That's your vision of the future. And it was almost like he bought into it, but it's like right now we have to live in the present and this is what it's used as. It's a store of value. But that was very subtle and nuanced in understanding this notion where most people just think that these guys don't get it. It's like, it's the same thing as Elon, where people don't think he gets Bitcoin. It's like, we get it. Like, we get consensus. We get there's only 21 million. Like, one of the smartest people, that this guy just like fundamentally doesn't get all of this. Like, I just don't buy into that.
No, I believe Elon fully understands it. He holds 12,000 on Tesla's balance sheet. Like, if he didn't, he would sell it.
And SpaceX, I believe.
And SpaceX as well. So yeah, he probably holds around 20,000 Bitcoin. And personally, I assure you, he probably holds a lot as well. But it was also from the All In podcast, the two things. The second thing was the opportunity cost. And this is what a lot of people can't understand, that I have friends trying to flip flats, and the work they're trying to do. And that's not even their primary job. They have no experience with real estate. But because they've seen their parents do it, they're like, I honestly, I could go on about an hour just on about real estate, but the work they're doing, and I'm just sitting there, I'm just like, just buy a bit of Bitcoin. Like it's just a lot less work, and do the work, but it's less work holding it. But it's either stubborn ego and I think or my parents' generation just kind of skewed everyone else below them's values, visions of what the world should be. But yeah, it's another mentality and a way of thinking about the world.
It reminds me of one of the slides in Saylor's recent presentation he's been giving, where he just has a slide of two columns lists of all the different costs and frictions associated with owning property. And when you put it in that light, it's like, yeah, no, this is just the best form of property. There's no cost associated, no upkeep. You don't have to get after your tenants. Like it's very simple and straightforward. So I think that's been an effective one for reaching these segments of the market that, it sounds like your friends or peers are in, where it's like they know they need to do something, right? And they've landed on, what their parents did. Let's, flip some flats. But it's like, no, there's just a much easier, cleaner way to do this.
Were you referring to the Saylor presentation, the one he did at Cantor?
Yeah, it was that one. And I think the one he did in Nashville was similar. It had some of the same slides in it. But yeah, it just goes through all the costs associated with owning property.
Yeah, that presentation was absolutely incredible.
Really, I
he
heard that this past week from somebody, and they made a note. They were like called out, like you got to go listen to it. And I wrote it down. I
It's
haven't
good.
gotten to it. Yeah.
Yeah.
Yeah, so I've been the biggest MicroStrategy bull since almost October of 2020. But one of the reasons is as the UK don't have access to an ETF or anything
Right.
like that. I'm sure we'll be getting onto that later. So you have all this fiat essentially sitting in a pension. And I was like, okay, this guy is buying it. But it was a defensive play from Michael Saylor. He's like, I've got all this cash, don't know what to do with it. Okay, I'll buy Bitcoin. And then some of us in the UK are like, oh, okay, that's quite cool. Just give him our money and see what happens. And it's thank you to the FCA, because without them, our returns have just been magnitudes greater than anything that we could have hoped for. But what Michael Saylor has done in this past, I could say week, but he's just rewritten the financial playbook, and I just don't understand how anyone isn't talking about it. It's mind blowing. It's when you first find Bitcoin, your mind's blown when you actually first understand it, and then when you read about MicroStrategy and the whole play he does, it's like it just blows your mind like multiples more, and how it all converges with one another. It's insane. It's so hard to even talk about this to other people because it's just a completely different way of thinking.
It's very true. And it's crazy that the average normal person still has no idea who this Michael Saylor guy is. Like maybe they saw, I remember it because it always comes up on Twitter of like, I guess it was some, maybe New York Times or some other mainstream media when it was like basically the depths of the bear and it was like Saylor bet billions and lost. And so everybody references that now that he's, obviously way up on the position. But it's like, for most people, like I think they probably don't even know who this guy is. So it is mind blowing to your point. And yeah, you've done a great job of sort of covering everything going on with MicroStrategy on your Twitter. I'm curious, like, what is any thoughts around the most recent sort of announcements of the 42 billion? And do you think that he gets through all of that like in the next couple months and issues another announcement, or what do you think?
Yeah, so 21 billion of the ATM equity offering. I think he's gone through about 5 billion already, and I think he'll be through it by mid-December. So the 3-year projection sounded normal when he did that earnings presentation, right, which was, again, one of the best earning presentations I've ever sat through. Just from a visual learner, just to see all those charts and graphs is insane, and the transparency is also incredible. But yeah, he's going to go through that ATM definitely before the end of the year. And then he's just issued another convertible note for 2029 at 0%, which is insane because it's essentially saying that these bond buyers don't want any interest on the debt. They'll just take like the 2027 note. It's above par by 170%. It's the volatility on these products is insane, and the performance of these bonds. I think on a blended basis, all 5 convertible notes have outperformed Bitcoin since he's issued them. And we're talking about bonds here, like that's not meant to happen in today's whatever. So yeah, he has 6 convertible notes going out from 2027 to 2032. 2 of them, I believe, are eligible to be converted. I don't know the specific details of, but I believe by mid-December, around mid-December to end of the year, that they could all be eligible to convert. So that could be short-term bearish that they get converted into equity, just increasing the outstanding shares and with the ATM as well. But I think issuing a convertible debt with 1.75 billion repricing is going to go to 2 billion, which is going to be their largest convertible bond by over 1 billion. Just shows that the institutional demand, again, so many institutions and people cannot get access to this product, and like me, you essentially all have to buy it. And there's probably all investors all over the world scrambling for this kind of instrument. And then you've got people crying about a NAV premium that's trading at like 3x. I'm like, yeah, so I'm buying it at 170, 200,000 a coin. Like, that's cheap because where else is my money meant to go? And I don't know one company that trades at book value. You look at any of these companies, and again, we're denominating in fiat. It makes no sense to be thinking, oh, it's got a trade at its book value. It's insane. But what's really important is to keep looking at its Bitcoin per share, which is the Bitcoin holdings against its shares outstanding. And that made another year to date high or a new all time high. So, again, that's accretive for shareholders. Um, and that's I think that's all that really matters. It's going to get harder for him, but look, he's gonna tap this ATM. He's going to issue even more convertible debt. There'll be huge, like, new rounds for every single year again, and more ATMs. But as long as people need access to these instruments, the demand's there. That's evident.
Does your Bitcoin custody setup keep you up at night? Maybe you still have coins sitting on an exchange worried about hackers. Or maybe you've set up your own self-custody but don't feel safe with your Bitcoin savings stashed on a little plastic device in your desk drawer. Gain peace of mind with Onramp and our multi-institution custody solution. Here's how it works. Onramp creates a dedicated multi-sig vault just for you. 3 separate institutions each hold a key. Onramp, BitGo, and CoinCover. But none can move funds unilaterally. Instead, only you have control over your coins. With Onramp's multi-institution custody, you'll sleep better at night knowing your Bitcoin is stored with best-in-class security on-chain with fault-tolerant multi-sig. If you believe your Bitcoin is going to be worth a lot someday, don't jeopardize that future by exposing your coins to hackers on exchanges, $5 wrench attacks in the real world, or perhaps most importantly, the risk that you might screw something up with a highly technical self-custody setup. Onramp's multi-institution custody eliminates single points of failure, reduces your personal attack surface and technical burden, and provides access to financial services that allow you to confidently secure your Bitcoin, including inheritance planning, insurance-backed warranties for all balances and transactions, low-cost trading, and more. Bitcoin is a once-in-a-species asset. Secure it right. Learn more at onrampbitcoin.com.
It's a fascinating part of the market structure because I remember going back to 2020 and like if you remember that summer we consolidated similar to this and then we kind of hung around 9 to 11 and it kept looking like it wanted to crash and there was somebody stepping in because you were thinking you had all that like from 17 or 18 to 2020 of volatility and you went up to like 14 there was a plus token and you're always just waiting for the shoe to drop and it didn't drop but there was Saylor stepping in and it feels very similar to like this run up where people were talking about maybe there was a sovereign stacking, but it's like Saylor was picking up all that coin from 70 to 90. And it's just a curious thing to think through, like the exercise of like what does the market structure look like without MSTR? Um, you know,
Should ask the Bloomberg analyst. He loves ETFs, and he thinks that the ETFs without it would be like a 30K Bitcoin price, which is just incorrect. The ETF trade volume is like a couple of percent of the entire market. Like the futures and spot market is multiple times greater than the ETF market. Yeah, again, we can speculate. Yeah, the price would be significantly lower without Michael Saylor. But again, I think we need to appreciate how big this market is. So, for example, MicroStrategy bought 50,000 Bitcoin last week, and everyone's like, "All right, the price did go up," but what is like, why did the price not go higher? And we have all these ETF inflows, but long-term holders, so anyone that's held Bitcoin for 155 days, they've sold about 300,000 Bitcoin. So there is, as the price goes up, you are going to get these sellers, and it just has to try and find that balance. But like we were saying, that the profit isn't as great as it is, and we are getting this huge demand of buyers. So that's why I think the price grinds up higher than and quicker than I expect. But for every buyer, there's a seller, and the higher we go, we will get sellers. So I just don't think people appreciate how big the Bitcoin market is when we think it's just ETFs. Why like the inflows are strong? Why we're not seeing the price go up? It's a lot, and it's like Germany. They sold 50, 60,000 Bitcoin within a week. Maybe it was OTC, but the market front run it. It knew the news, or the market was bigger than expected, and we do need to realize that this is almost a $2 trillion asset now, and what is it, the seventh largest in the world? It's a lot bigger than we give it credit for, because I think we're still in the mindset that it's really niche and we're the only ones here buying it.
Yeah, and we're going to see wilder things happen, I'm pretty sure, because if you think about it, like you can just insert another firm. If MicroStrategy didn't do it, somebody else is going to use the tools at their disposal to go stack Bitcoin in any way. And it's just a symptom amount of liquidity in this system, all the, capital chasing any kind of yield where all this construct is developed. So it's just going to get weirder from here. It's not actually going to get tempered.
Yeah, we saw Marathon also issue a convertible note, and that also got oversubscribed, and they had to reprice higher. And miners are very different to MicroStrategy. And something I've really learned this week is I think why the market takes a liking to MicroStrategy and maybe Semler Scientific more than the miners is that their playbook is so clear, concise, and coherent. You know exactly what they're going to do. I was reading that Marathon just announcement, and I was like, how much are you going to buy of Bitcoin? What's your asset expansion going to be? Or what do you need to buy? And it was quite confusing on where the cash is going to be deployed. But with MicroStrategy, you know exactly what's going to happen, and the markets love that certainty. So, but it also shows, look, Marathon's down year to date, but their bonds are getting bought up like no other. So again, the institutional appetite's there on a zero coupon. So when is it's also perplexing. How are companies not doing this? It's free money. So
Yeah, I mean,
it's just insane.
It's Saylor's been doing it for a while, and I mean, he's just like a mad genius. Gotta give him props for just executing this playbook. And I agree with you, James. There's still a lot of barriers to entry as it relates to getting access to Bitcoin. And that's why you are seeing so many institutional players gravitate toward MSTR and Semler Scientific, because to your point, they're very transparent about how they're executing their strategy. And there are such limited amounts of ways for a lot of people to participate in this market that they kind of find themselves having to, if they want to have exposure to Bitcoin's upside, they have to participate in something like that, where it's not directly, they're not participating directly in the asset, but they have financial instruments or proxies to do so. I mean, I even experienced this, it might have been last week or the week before, where I don't need to disclose the firm, but I had brokerage accounts and retirement accounts with a large broker dealer in the States here. And I was just taking a look at my accounts for the first time in quite a while, and I'm doing some personal consolidation. And I had some cash just sitting in my Roth account. So I was working with the FA who kind of manages everything. I was just like, could you just put all the cash into FBTC? And they couldn't trade that for me. They still are not allowed to place any of their clients' assets into the Bitcoin ETFs. And this is like a massive broker dealer in the United States. So what did I do then? Well, I said, put it into MicroStrategy. And because I didn't want to be out of the market, because I was consolidating things, I was rolling things over, that takes 10 days, 14 days, depending on the process and the custodians that you're dealing with. So it's like, I want to be in the market. I feel pretty confident that we're going to continue to tick up higher from here, and I don't want to be having to buy things 2 or 3 weeks down the road. So just a personal anecdote that really speaks to, like, there's so many people who literally go to their financial advisor and say, I want to be allocated to this asset class, and they still can't do it. They can only do it through MSTR or other public equities.
Yeah, and you've also got Vanguard not offering it, a number of asset managers not allowing investors to buy. I was reading something about IBIT was only approved for only 25,000 contracts as a position limit. I haven't actually dug into this. I just saw it as a top line thing, and I think Jeff Part from Bitwise was talking about it. So I haven't dug into the details, but again, there's a limit, or there's something that, okay, it's not just here you go, and we're going to replicate how we've done for other asset classes. So it's that barrier to entry, like you were saying. There's always a restriction, there's always a limit, and I think Bitcoin just hit 94,000, and it's almost like it doesn't really care what these TradFi people are trying to stop. And
Exactly. Yeah, it's such a key point that I was gonna bring up is like anecdotally I've so we try to be very diplomatic and button up in the sense that we want to work with a lot of the TradFi, help them get their solutions in place. But at the same time, to your point, it's the whole notion of it's just like the internet. Like you either jump on board or you don't. And it's not the perfect analogy, but it's like this notion of like the travel agent and like how you can now go online and get everything. It's like in a future world, if you really dig into the monetization of all these assets, do you really need a financial advisor to break you down how to manage your 60/40 and take your X percentage? And what's happening, I'm starting to see anecdotally from like this group I was talking to this week, and I've heard it from like my mother-in-law, is they get really annoyed when you bring up exposure and that their financial advisor has kept them out of like other exciting or more interesting things. So imagine like you have this like, format where you take their advice, but they're actually like at best not losing you. In real terms, maybe they're getting some small return, but in nominal terms, some small return. In real terms, you kind of feel that you're kind of going backwards because everything's getting more expensive and your retirement isn't actually like outpacing it. And like you're not dumb. You made all that money. It's always been weird to me that people just give all their money to somebody else to manage, but that's a different note. Like, so they accept that, and then they kind of know intuitively something's not right. And then you kind of tell them about this, and like, oh, I can't, or I've tried to ask them, and they don't tell me anything. There's this pent up like frustration that's happening, and it's I don't care because I'm not a financial advisor, but if anybody's listening, it's like it's to the point. Bitcoin doesn't care. It's like the internet doesn't care. It's going to do its thing, and you get left behind, and you got to figure out a way to get like them involved because people are going to literally leave because it's their money.
And we've talked about this in the past, but I think we are now really approaching the point of the career risk flipping from you're worried about getting fired for allocating to Bitcoin, where you should be worried about getting fired for not allocating, or at least having it on offer to your clients, educating them about it, having thoughtful responses when they inevitably ask you about it. Like that is, I think we're pretty much there. And as we were talking about before, like the 100K mark will accelerate that even further, where if you are acting in a fiduciary role, you better have a good answer why you didn't bring it up with your client, because they will leave. They will leave your firm. They will pull their money out because their friends, their peers have gotten some exposure and they feel like they were led astray, which they were. And so I think we're now finally approaching that point where that career risk does flip.
Yeah. And to that point as well, I mean, it's not even, Brian, you're right in the sense that some clients will probably get fed up with not being able to access Bitcoin directly through their FA, but they may even just passively or actively start moving money away from their advisor,
Yeah.
right? Or like as they continue to earn direct deposit into their account, they're just they're coming to Onramp and they're buying Bitcoin through Onramp, or they're opening up an account with Swan or Relay, or and they're just accessing Bitcoin directly rather than working with their advisor and having the Bitcoin exposure tied into the rest of their portfolio and their more comprehensive financial planning. I still think there's a lot of value in that because people need someone. In my opinion, most people will need help in terms of thinking through like estate planning and more complex considerations, but I do think that Bitcoin plays an interesting role as it relates to the demonetization of other asset classes, allowing people to preserve and grow purchasing power without having to allocate to all these different financial products and asset classes. So that is an interesting dynamic. But I do think that people are just going to start moving, if they haven't already, which a lot of people have, they'll just start to continue to allocate to Bitcoin away from their advisors, which that's not the best situation for either one of them.
I think you just hit the nail on the head. It's like, so you've got rampant inflation, you've got rampant currency debasement, you've got people trying to work out, all right, I'm getting screwed, but I need to do something, so I'll flip flats, or they're working a 9 to 5 job, or they have to work multiple jobs, and they're like, I can't really get ahead. Even for me, and I say this with my brother, so you do a full-time job, you're then managing your own assets, you're essentially your own financial advisor. You're doing and then you've got to deploy the capital. You've got to do 3-4 jobs just to keep up or try and beat the inflation. And I think people are just getting sick and tired where they're working that 9 to 5 job and then they come home and I can't even afford. I'm not even laughing, but you can't even afford food or the basic necessities in first world countries. And I think people, like I was doing, are just going to stop. they're just going to be like, I'm not doing this, and they're just going to find another alternative. The what perplexes me is people like choose gold, because I just don't understand at all from the 21st century how that's even remotely possible anymore. But yeah, I think people are just going to stop playing the game. I just think people are just
Yeah,
going to be no.
yeah. What you said is interesting because stop playing the game. Um, we can kind of like see how with equities and things that are movable to sell and buy Bitcoin. The one that we were talking about earlier that I wanted to come back to is the real estate and these flats flipping and commercial real estate. That's the one that scares me because if for some reason it's the physical nature of it that it's kind of the same thesis, right? Scarcity, it's just at a different, magnify that Bitcoin has or accentuated, but like they miss it. They don't see it, but it's the one that's going to be harmed the worst because of it's the door just gets smaller and smaller. And you see this already with interest rates increasing, like in hot cities, like we're in, Austin or these other markets where they're already down from like 2021 when the market was crazy, 20 to 30%. And there's this fear like that only accelerates, especially as people like, why was I holding this? And all the like, all that whole notion that door's just getting smaller and smaller because we know how much it's just like bonds 2.0 and that it's a horrible asset to hold.
I keep a really close eye on the Florida real estate market, and that looks like it's just I haven't seen anything like that. It's quite insane, to be honest. But yeah, everyone ascribes a monetary premium to property because that was the apex asset to do before the internet, and it made sense. But I think there's like 80, 90% monetary premium to real estate, and it's this thing will shrink really, really rapidly. And if I told you some of the government schemes that went on in the UK that have now actually stopped because they realised that all these buyers are now essentially underwater. So really quickly, there's something called the government help to buy scheme for like essentially my generation who wanted to get on the property ladder, because apparently getting on the property ladder is the most important thing in the world and that's what you should aspire to. You would only have to put a 5% deposit down on a flat. You can't buy a house, you can only buy a flat. And another stat, 75% of all the properties available in London are flats. So there are just so many flats for sale. So all the idea was you get all these property developers to build all these really poorly manufactured new flats, and you could charge a premium to them. These flats in London or just outside of would go for £600,000 at its maximum. You'd only have to put a 5% deposit down, so that's about 35 grand. And you have all these people that will flock in, can't afford it, but they only had to put 5% down. And this is obviously when rates were relatively low. You then have rates, say, at 5%, which is historically average since 1950. And because our wages are so suppressed, and especially in the UK, like I think the average wage in the UK is probably about £40,000, maybe 50 at a stretch. Actually, I don't think, yeah, about £40,000. So the wages now don't even cover the mortgage payments. So then after 5 years, you have to not only pay your mortgage loan on the 95%, you then have to start paying interest to the government on top. You pay a mortgage to the bank, you then pay a mortgage to the government. And every year you can't sell that flat, it goes higher and higher. And wait for the kicker, that is in line with CPI inflation. So if we think CPI inflation is going to run riot, which it probably is, you're looking at mortgage rates of like 10% on flats that are worth no more than 250 grand, but they've obviously X 2.5 times it on people that can't afford it. So they're all at the moment now sitting in negative equity, stuck in a flat, and they've actually just scrapped the scheme of like last year. And this has to be like the start of some form of real estate contraction, which it is. But it's mad how this is like just playing again, or people are still very happy because it's property and they're very happy to buy a property and have that assigned property ownership. And I think that's again, it's psychological, it's the mindset, but it's insane of what warped world we've created, and trying to buy a flat, rent it out, earn the yield. And it's just, yeah, for me, it's insane.
Yeah, it's in a sponge for liquidity. There's a similar story. Like you have to go look through it because I don't know it to detail, but basically how Fannie Mae was created.
Oh,
And it's very similar to what you're describing. It was like created to absorb this liquidity. Like because that's effectively what it is. It's a sponge for dollars and taxes. And
Now it all ended up on the Fed balance sheet.
yep, yeah, this is like yeah.
And I actually had a really good stat. I think globally, central banks, the top central banks around the world, no, the top 15 had about 40 trillion on their balance sheet. Through this whole quantitative tightening cycle, I think they got down to about 34 trillion. So like they managed to get like 6, 7, 8 trillion cumulatively together. And you're like, all right, when's the next crisis and how much are they going to have to print? And when you were sitting there in COVID and they just printed 40% of all the money supply, you're like, I didn't even know what to say. I think I was in shock.
It's transitory. It's going to be transitory. We're good.
Yeah,
it's going to be transitory.
There's no accountability. You're all liars. It's again, I don't want to play. I want to opt out. And everything they do is just. It's come to the realization, like for me, that anything like they say, I just do the opposite, and it kind of just works out way better. Don't buy Bitcoin. Buy Bitcoin.
There was an interesting anecdote as well. It might have been from this week where someone that works with us here at Onramp mentioned that there's someone who owns understands Bitcoin, allocates and has allocated to Bitcoin for quite a while now, and has a material position, but continues to own real estate, right? Because there's uncertainty with the Bitcoin stack. Historically, there's only so much you could own because you either were trusting one institution or you had to take on full responsibility, right? And you bear the burden of potentially messing that up yourself, or your heirs not being able to access it, or you're welcoming violence into your home, especially as Bitcoin continues to appreciate. So there's also this interesting dynamic where people want to own more Bitcoin in some cases, but they don't because they think that it could go to zero. Not because they think Bitcoin could go to zero, but that because they could mess something up or they could have the wrong counterparty exposure, and then that could result in catastrophic losses and a massive hole in their balance sheet.
That's a big component. That's going to be like something that individuals are going to have to grapple with. You mentioned, James, like you don't get why people still allocate to gold. I think that we misprice the latent like it's in our DNA, right? You think about for thousands of years, you got to figure out like fight or flight and all these things, and like gold is just money forever. So there's the natural version of like how do we decide on gold being money, and people thinking about their grandparents and all the things. So I think that's where that kind of is built in. But a cousin of that is what Jackson just references. We are very we've been told diversification our whole lives, right? Like, don't get knocked out of the game. That's kind of part of why this podcast is called this podcast called The Last Trade, is because once you get it, it's like, what else do? You allocate to it, you put all your chips in a basket, and then you watch it very closely. But it's part of where we get excited about what we're working on is we recently started thinking about the mental model, especially with normies that aren't in. It's like, let's not talk about why Bitcoin's not zero. Let's talk about why it's not 10 trillion. And the reason why it's not 10 trillion is because you've always had a single point of failure if you're going to allocate. Because you have a single point of failure with yourself. God forbid you get hit by a bus, you lose all the money. Or you have a single point of failure because it's Mt. Gox or Celsius or BlockFire. You can go down a laundry list. And that's where we get excited about this multi-institution notion. And we've just seen crazy demand coming up to this 100K is because people are waking up and be like, wait, I don't want this in my house. There was a story, and it happens everywhere, but they were telling in London specifically that like there's spotters that will watch when people come out of their house and rob their Patek Philippe, like off their wrist. It's like, what do people think is going to happen when they find out that the plastic devices are sitting in people's homes, like in next to their family members? And nobody tells this story of like there needs to be risk mitigation around that. I have a friend that his dad was in real estate, and he was adverse for a while to Bitcoin. And what he said is his dad would say, the thing about real estate is it's not really liquid, but it's always there. And his response is, the thing about Bitcoin is it's not really there, but it's always liquid.
Yeah.
James, maybe before we wrap up, anything you'd want to just flag that we didn't discuss today, top of mind, heading into 2025, what's exciting to you?
Yeah, we've actually probably not talked the greatest story so far. That Ethereum is literally dying in front of us. I'm
Yes.
looking at the chart. It's 2.5% down. ETH BTC is 6% down. It's at 0.033, and the market cap spread between Bitcoin and Ethereum is about to hit 1.5 trillion. And it's incredible that this asset has been going for so long at number two. It seems like Solana. This is definitely not a crypto, but it's insane how long con the Ethereum trade was essentially. And again, that's actually quite nice to say. Like, if Bitcoin is tulips and it's been going for 15 years, the Ethereum's actually only been going for what, 7 years, so like half Bitcoin's time, and that trade is kind of done. So again, it kind of shows that strong narrative that Bitcoin's actually not a tulip bubble, but yeah, look, Ethereum kind of it has changed its narrative one too many times. It's just interesting to see how it has traded against Bitcoin. And again, look, Ethereum probably is going to go up in nominal values in dollar terms and everything like that, like most of this stuff. But again, if we're using Bitcoin as that benchmark denominator, it's just, and if you compare it cycle after cycle, it continues to generate worse returns against Bitcoin. So
Yeah. And any first principle thinker, like, it had so many narratives they could hide behind, but now they're basically all gone because you in the market's kind of shown, even though it's more nuanced than this, but you just have meme coins that all exist anymore. Because like Ethereum's narrative was like, well, it does X, Y, or Z better or faster or sounder or whatever than Bitcoin, but those all have failed. To when you get down to it, there's nothing else. Because like Solana doing it is a proxy for like what ETH try to do, and then it eventually fails, and you just can go down. And so investors kind of grok that, and so now there's no utility around anything else except for let's just trade on momentum and FOMO, which is actually fine if that's what people want to do, but call it what it is versus saying that it's competing with money, which is effectively what ETH has tried to do and kind of conflated crypto and Bitcoin.
I think that's been one of the most sort of healthy signals in a weird way of this cycle, is that the broader crypto space isn't even trying to hide behind these false narratives of decentralization or this or that protocol for this specific use case. It's like, this is just pure gambling, meme coin momentum. And I think, again, this points back to, like, this is just the process of Bitcoin sort of, diverging from the rest of this market slowly over time in the minds of the market. And I think this is like a critical moment where it's like, well, Michael, to your point about Ethereum specifically, I mean, they just contradicted themselves, right? Like, first they tried to be money like Bitcoin, realized that wasn't really working, and then like leaving proof of work was really the nail in that coffin of being money. And then they said, okay, well, now we're going to be, utility focused, smart contract focused. And then they just got, leapfrogged by Solana, which is faster and cheaper to use. So if you're going to be trading meme coins, it's far more efficient to do it on Solana than it is Ethereum. So that's where, Solana's found some product market fit, if you will, for gambling, because it's faster and cheaper to do. You can get in and out of positions a lot faster, and for, much cheaper. So it's just been a fascinating development, but I do think the longer term trajectory is very healthy, because it's like, at least we're being more honest about what this stuff is.
Yeah, capital from Ethereum is going into Bitcoin. Like, a couple of my friends have sold their ETH. They bought Bitcoin with it. It's probably one of the best signals. Again, you can see it with the ETF inflows. Okay, you don't get that staking yield with it, but is the appetite there? No, not really. And look, you're going to get a Dogecoin ETF, you'll get a Ripple, get a Solana ETF. That's fine, but let the free market decide what they want and what they want to do with it. That's perfect. And it's taken however many years. We understood it, but again, it's nice now for the mainstream media and mainstream retail to see, okay, there is literally one. I don't even like calling it a crypto asset, but it's just one form of money, and then the speculation is below that. You just have
The
to look
thing
at
that the thing that I think it did do, Brian, that's kind of I just hit me, which is actually more nefarious than competing with money, is you with Ethereum, you guys, this is interesting. Like, so Ethereum Yeah, effectively, like incepting the market, we're going to tokenize and create smart contracts. We're going to do all these things. And so, to the point that we all just recognize, okay, it's not competing with money. Maybe it doesn't store value. But what it did was it created this like weird malaise or kind of like smoky market of like, well, there's still digital assets. So when you look at like the Franklin Templetons and all these worlds, they're all building these like blockchain based infrastructures with securitizing all this stuff based on a premise that's still latent there about Ethereum. And so now that's basically like the next narrative of where this goes into, which was, I think, maybe not like always part of the end game is we're going to tokenize all this crap and we're going to like conflate and obfuscate, Bitcoin in there. And so it's going to absorb capital in an indirect way. Because the thing that everyone misses with the blockchain is like you still have a counterparty. Like that's the difference between Bitcoin and everything else is that you can take delivery where everything else you can trade it, but you still have a counterparty that has to own the underlying, and those are fundamentally two different things. And that's what everyone kind of conflates with the tokenization of like, well, who actually owns the underlying? Because it doesn't really matter who owns what's on the blockchain. It's just
Yeah,
a ledger.
I think the market dynamics are very favorable now to Bitcoin because you have like this infighting between all these supposedly credible crypto assets, and then you just have like the meme coins, and then you have Bitcoin, right? So it's like all the serious people are paying more attention to Bitcoin. It's the seventh largest asset. The ETFs have been wildly successful. The Ethereum ETFs have been absolute disaster, just dumpster fire results. And then you have meme coins, which, again, to the points made here, if you want to just gamble on them, then you're free to do so. But there's at least a recognition that that's really all they are is gambling. So I think this is ultimately good market dynamics.
100%. And the tokenization piece, Michael, is further solidifying what I'm saying in the sense that like they're no longer clinging to these other use cases. It's like, no, we're just going to tokenize real world assets. Like that's all we've got left to do with these quote unquote decentralized blockchains is we're just going to put real estate on the blockchain for some reason. And so it's a different angle, but the same in the sense that like it's an admission of there wasn't anything there, right?
Yeah, but I think incepted in the market structure is Bitcoin still a risky asset, like all this stuff, and nobody's thinking about Bitcoin as a material asset class yet. They're just throwing it all like the baby out with the bathwater that like this is all speculative
Mm-hmm.
because of that.
What?
Because of that.
Sorry, I think why maybe I'm flipping to Bitcoin, slightly going risk off as an asset here is the dollar is above 106. It was actually even over 107, which was like a year-to-date high, maybe even like hit a 2-year high. And notoriously, Bitcoin and the dollar have an inverse correlation with one another. And we've now obviously got strong dollar, strong Bitcoin, high yields, which is very unusual. To be fair, Bitcoin's pretty much weathered the quickest hiking cycle in 40 years as well. So is it a zero interest rate phenomenon asset? No. Is it only for like weak dollar? No. So it's kind of like, is it this American asset now that will kind of grow with this strong dollar? And if you have that, if you ascribe to that dollar milkshake theory that the dollar just slurs all the weaker currencies, which I believe, especially with the UK and the pound, and like, don't even get me started on my country, but yeah, this is really, really encouraging because if the dollar was at below 100 and then the dollar runs, you'd expect Bitcoin to fall, but like I don't see, look, the dollar probably isn't going to go much higher, or even if it does, Bitcoin doesn't seem to care. So there's huge amounts of tailwinds for Bitcoin here.
Yeah, agreed. I think it might have been last week where we kind of discussed the maturation of Bitcoin with the first 15 years being predominantly driven by liquidity and deficit spending and strong dollar, weak dollar, what's going on in currency markets. And I think the four of us would agree that'll continue to play a role because Bitcoin exists among these hundreds of trillions of dollars of other asset classes and currency markets. But I do think that we're at a point now where it starts to decouple. It already has, James. I think that you've published stuff on recently just related to Bitcoin's correlation to, was it NASDAQ, S&P 500? And
Yeah.
for a while, people have kind of just said that, Bitcoin is high beta tech exposure, right? But it's become increasingly clear that argument no longer really holds validity. So I think we're at a point now where the market has matured quite a bit. players are here and stepping in from both a political point of view, but also from the broader investment community. So I feel pretty good just in terms of Bitcoin decoupling and starting to be understood as a risk-off asset in the marketplace. Well, James, unless there's anything else, I mean, we could call it here. I know it's late for you, and appreciate you carving some time out around dinner time. Maybe for anyone who hasn't come across your work before, where would the best place for them to get in touch with you or find your work be?
Yeah, I post all my analysis with CoinDesk, and then I'm on Twitter at, I think, BTCJVS.
Awesome. Well, thanks, James. Really appreciate the time. It was fun to have you on, and quite bullish. I'll have to do a smash buy once we hang up here.
Cheers, guys. Thanks for having me.
Thanks, James.
Yep.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.